heading into a results-heavy week. HDFC and HDFC Bank will be announcing their numbers today. They also have their AGM today, where you should expect a lot of questions to come in on the impending or possibility of a merger of these two entities, creating perhaps a behemoth in its own right, rivaling that of ICICI. So that is a very big event waiting to happen in the financial markets. Will that happen? If that happens, what are the problems? To answer in part those and other financial questions, Manish Chaudhary of IDFC Securities joins in with his Q1 expectations. And joining us from the merger perspective is Ashit Shah of J. Sagar, the legal firm. Gentlemen, thank you very much for joining us. Manish, have you? What's the in-house view? Do you think with this affordable housing being treated as infrastructure, it becomes easier legally for the two to merge? Can you give us any idea of how the merged entity will look like? What are the numbers we are staring at?
Yeah, Lata, first of all, I mean, in terms of the cost of regulatory during the transitioning period, that comes down pretty sharply with these regulations. So our sense is it is significantly beneficial for a merger bid for these two entities, and as the cost of regulations come down. Now there are, I mean, in terms of the merged entity, if you look at it, it's going to be a second largest financial institution in India after State Bank of India. So just merging and adding the two balance sheets up, we're looking at over 5 trillion of loans, 5 trillion rupees of loans, and over 8 trillion rupees of total assets.
Okay.
That's going to be the second largest financial services company after State Bank of India overall, as and when it gets merged. So, I mean, clearly the benefits of such a thing can really come from the fact that HDFC Bank will require much lower priority sector assets, because a lot of HDFC Limited's portfolio will be qualifying for priority sector. So clearly there are benefits for HDFC Bank particularly, but we'll have to wait and see how these go.
Okay, so it will be actually King ICICI getting kind of going into second place if the merger were to happen. But Ashit, can you recall the problems that ICICI Bank had when it merged ICICI to itself? What is your sense now that these problems will be much less if there was an action replay with the HDFC twins? Ashit, that was to you.
Okay.
I think Ashit is not able to hear us. We will check that audio with him. But
yes, Manisha, I just had a couple of questions for you. One, what could be the regulatory challenges of this merger? I mean, you spoke about how the cost of the regulations could significantly go down, but what could be the regulatory challenges this time around?
See, the challenges are lower, but there will still be a transitioning period in which there will be some amount of CRR and SLR that will be required, because on day one, not everything will be exempt from CRR, SLR and priority sector. It will be, the benefits will accrue over a period of time. So during the transition, there will be requirements of CRR, SLR, which will be more than normal for the bank. So clearly the bank will have to manage those challenges. Clearly, one of the other things that we'll have to look at is also the ownership structure in terms of the foreign ownership for these two entities. HDFC Bank's foreign ownership is higher than that of a bank as of now. So merging these two will also have to have some kind of rationalization and time-bound reduction in foreign ownership stake for HDFC Limited shareholders as well. So I think these are the two major challenges apart from integration, etc. issues.
All right. Well, we are still waiting to re-establish our connect with Ashit Shah of J. Sagar. Manish, a minor digression from our main theme today. Do you track Kotak Mahindra Bank? Are you enhancing your view of that stock because of the purchase of MCX shares?
So I think longer term this is going to be positive for Kotak Mahindra Bank, but I think near term earnings impact and financial impacts will be relatively low. So at this point of time we're not changing our view on the stock really.
Okay, so coming back to HDFC and HDFC Bank, what is your expectations as far as earnings are concerned, and what's your call on the stock itself?
We have an outperformer on HDFC Bank. We believe that the stock will continue to do reasonably well. We are expecting a healthy earnings growth of 25% this quarter. We believe that most of the operating parameters will remain pretty healthy. There should be stable, continuous loan growth about 17-18%. Credit costs and asset quality should remain pretty much stable. We don't really expect any change. And margins also on a QOQ basis, we expect it to remain stable at around 440 basis points. So that should be one stable and healthy operating performance, and we continue to maintain our outperformance rating on that. Secondly, for HDFC Bank, it will be another stable quarter for interest loan spreads. We do not see any change in that. Even for loan growth, we continue to expect a stable 17-18%, and profitability should also be reasonably healthy, with asset quality being again stable. So, I mean, we continue to have a neutral rating on HDFC Limited, and we believe both of these results will be, as usual, will be relatively stable, with no real cause for concern for investors.
Okay, we will come back to you on whether that will change if at the end of the AGM today you get some cues about the merger itself from Deepak Parikh's answers. But on that issue, I think we have now re-established connect with Ashit Shah. Ashit, with this change being brought about by the Reserve Bank that affordable housing can be treated as infrastructure and therefore qualifying as a larger, qualifying for 7-year bonds, what is your sense? Do you think that regulatory challenges are cleared for an HDFC Bank HDFC merger?
So I think, Lata, one of the things which was preventing this HDFC and HDFC Bank merger earlier, and one of the main stumbling blocks, was the fact that for a bank you need to maintain the CRR and the SLR ratios, whereas HDFC being an NBFC, you don't need to maintain these ratios. What the July 15th RBI circular does is it says that if a bank issues long-term bonds and it's going to use those bonds for financing infra loans and low-cost housing projects, then there are exemptions from the CRR and SLR requirements, and therefore I think this partly addresses the concern which was there some time ago for the HDFC Bank merger. Now, having said that, obviously the merger would depend on a lot of other factors, but this does partly address that concern.
Have you looked at the FII FDI holding in both the entities? There is also the HDFC ownership of HDFC Bank. So all told, do you think from the FII angle or FDI angle some shareholding will have to be foregone, will have to be scratched for this kind of a merger?
You may have to do that. I haven't particularly seen the FDI and the FI holdings recently. But any merger, you will have to go through the normal court approval. You would need all the regulatory approvals. If there is any rejigging of shareholding required, you would have to get that done as part of the merger process.
Okay, and do you think the two companies should initiate the merger just yet, or wait for what the Reserve Bank is going to say about IDFC Bank, the future IDFC Bank transferring IDFC loans to itself? There is a minority of opinion over there that it's not going to be smooth sailing. The Reserve Bank may not allow all of them to be transferred to the new IDFC Bank, and therefore it is not as if all the CRR SLR problems will be sorted out. Your take, is there a grey area for you?
I don't know if all the CRR and SLR problems will be sorted out even here, because what you need to look at is that the CRR SLR exemption is for low-cost housing projects, and not all of HDFC's portfolio is low-cost housing.
So KK Mistry told us,
Ashit, for maintaining CRR and SLR.
KK Mistry told us that it is well over 50%, the affordable housing exposure. He didn't give us a number, but he said it's well over 50%.
Right. Right. So you would still have the balance, which still would need to have to comply with the CRR and the SLR requirements. And I think, the IDFC and IDFC Bank merger is, quite different from the HDFC Bank and HDFC merger, in the sense that HDFC and HDFC Bank have been, in the picture for a very, very long time. IDFC Bank is a new bank which is going to be set up. So RBI's requirements there may be quite different from what RBI may require under the HDFC and HDFC Bank merger.
Manish,
you would probably compare the HDFC and HDFC Bank merger to ICICI Bank merger.
Sure. Manish, I just wanted to bring one point forward. I mean, I'm just trying to play the devil's advocate here. I was reading a report which said that, HDFC Bank may not want this merger to go through at all, because they can still enjoy fee income without having to take up the mortgage on their books. So, for example, Aditya Puri has taken HDFC Bank much ahead in terms of performance delivery, etc., compared to what HDFC is currently. Do you think there may be some internal conflict on the merger process?
Actually, in my opinion, HDFC Bank stands to benefit a little bit more from this merger, largely because it also gets the priority sector enabled assets from HDFC Limited. So going forward, just because of the fact that some of these housing loans will be eligible for priority sector loans, the HDFC Bank's standalone priority sector requirement will reduce. So to some extent, in my opinion, HDFC Bank is probably more of a beneficiary of the merger than HDFC Limited as such, at least in the near to medium term.
Okay. Well, finally, before we let you go, any thoughts on Axis Bank? They also come out with numbers. What's your view on that? On the earnings and more the rating on the stock?
Okay, in terms of Axis Bank, we continue to have have an outperformance rating. We believe that the stock has continued to do pretty well over the last few months, and earnings will continue to be reasonably healthy. We do not really we continue to expect better asset quality performance from the bank over the next few quarters as the economy improves, and we believe that is going to keep driving the stock forward, especially in current scenario, whether it is still relatively lower valued than most of its peers. We believe that improvement in economic environment and improvement in asset quality will continue to drive performance from the stock.
Ashit, finally, if you were just asked to advise by the HDFC twins for this merger, what would your advice be?
I'm sorry, could you repeat that question?
If you were appointed, if your firm's advice was sought for this merger, what would your advice be?
I think, from a legal perspective, there are various issues you would need to keep in mind, for the merger to go through. In terms of, court approvals, you would need competition tribunal approvals, you would need approvals from, RBI, IRDA. So, while this is one stumbling block which seems to have been addressed because of the new RBI circular, there are lots of other issues which both the managements would need to, think through to determine whether the merger is feasible or not. Ultimately, it is possible, but you would need to see whether it, has commercial value, whether it would lead to economies of size, economies of scale, whether it will lead to optimal utilization of human resources, financial capital. So, there are a lot of issues to keep in mind,
Point
for
taken.
the merger, not just this one point.
Point taken, Ashit. Thanks a lot, Ashit and Manish, for joining us in this discussion. But Manish's numbers ring in the ears. A 5 lakh crore entity about to be created, the second largest in the financial sector and the largest private sector financial entity. I wonder why any shareholder would say no to such creation. And both, of course, sterling companies in their own right.
Okay.